Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 19th. Mike Boutros with you on the horn. Great to be with you guys. Jay, Steve, everyone, good morning to you as well. So, interesting start to the week. We're finally getting the dollar pullback that we've been looking for. It was a little bit slow burner last week, but we are getting that start to move on. So, on the menu for today, we'll talk about DXY, dollar yen. Got to look at the SPX breakout, sterling at resistance, Aussie at resistance, gold, euro, dollar CAD, crude, and we will take a look at Bitcoin as it continues to hug the highs here. Any other questions or trade setups? As always, guys, feel free to throw them on the message board at any time. Let's jump right in. DXY, here's what it looked like yesterday. So recall that for the weekly chart, we've been following this for some time. Here's what it looks like on the live chart. The whole premise of this basic pullback in the dollar was key resistance. We checked it for 3 weeks in a row. 94.47 to 94.65 is exactly what tipped the high here. Here's the first initial break. Now, this is the weekly chart. So nothing really counts until we close sub 93.73, but certainly on the current move, this is just that the risk is lower. Here's the daily chart. Looked like yesterday. We were sitting right on the median line for the current operative uptrend that we were following. Those former swing highs from August coming in at 93.72. Here's what it looks like on the live chart or on the daily chart now. As we crash through 93.72 and already on tap into that next support zone, which is right here. The high day close for this year, or I'm sorry, the high day close for August and the November high day close from last year. We're just ahead of that. So nice move lower, still holding on, looking for 93.45 on the downside here. Here's what the intraday chart looked like yesterday. A proposed pitchfork that we've been following since last week really highlighted just the risk to the downside while below the upper parallel. Here's the lower parallel converging on that key support zone a little bit later on tomorrow. Here's what it looks like now. So the convergence happens on the 20th, so tomorrow, but one way or another, we've broken lower and we're holding that pitchfork pretty nicely. So as it stands right now, the risk is still for a little bit of a recovery off that level. Levels of interest for resistance would be somewhere around here, okay? Basically near the initial opening range low that you made yesterday, near that Friday, Thursday low that we made last week. Here's the parallel converging on that today, basically into 93.85. So if we are heading lower, rallies should be capped by that region. We're still looking for a touch of key support. One move you can look at, a measured move on this type of play with the extension off the high, just to give us a little bit of a tell here. You'll see that the 100 comes in just lower. So 93.36. Focus on that whole region. 93.36 and 93.46 is support for DXY. Now, we're pretty limited on data this week, as I've been telling you the entire week, essentially. We don't have anything out of the US until we head into Friday. Manufacturing market PMI is actually going to be an interesting read. We're expecting a clip of 60.3. That would be the lowest that we've gotten since March. So certainly, as you continue to look at the profit margin squeeze here, we'll be looking to see market PMI towards the latter part of the week. But before that, tomorrow, you have a host of inflation data. You have UK inflation, Eurozone inflation, Canada inflation. Heading into Thursday, or Wednesday rather, no, Thursday, you get the Japanese inflation. So it's loaded. More inflation data to come. We'll look at the gold levels in a moment, which is going to be something we'll be tracking very closely this week. But for the dollar, off slope support here, initial resistance 93.72. We'd want to see this thing tap out ahead of 93.84 if we are heading lower. Key support 93.36 into 93.46. Questions on DXY? Okay, so I would be remiss if we didn't jump right into dollar yen. I gave you guys an update on that one as well last night. I think this is just a critical resistance range. Here's what it looks like on the weekly chart. I'll show you that in live just a moment here. Here's what it looks like. Big resistance just higher. We missed it last week by just a couple of pips. The level's actually 114.55 into 14.92. You got a 40 pip range of resistance defined by the 2018 swing highs, the late 2017 swing highs, and the objective 786 retracement from the 2016 decline. Big levels. So you're looking at it from 1,000 feet up, maybe a little bit more higher, but we're looking for big resistance here. Here's what the daily chart looks like on dollar yen. So once again, there's that 1455, 1492. You're seeing momentum is in overbought condition. Don't want to try to fight that yet, but the pivot above 113.78 certainly has us looking for that last stretch if we can get a clip into this region. The gist being, guys, we're looking for topside exhaustion. The risk is for the topside to be exhausted. It's a breakout. Any way you slice it, it's a breakout. Hell, on the weekly chart, it looks like a major breakout. But that breakout now approaching uptrend resistance. Now, if you look at this on the deeper time frame, here's what it looks like on the 2-hour chart. Here's what it looked like last night on that. Weekly opening range is taking shape just below that 1455 region. We're looking for a break here. If we break below 1378, like I said, likely to see a larger slide. If we breach uptrend resistance, this thing's likely to see 115, 115.50 pretty quick. So it's the abomination, guys. I'm on breakout watch here. I'm not holding any positions on this, just as a disclaimer. I'm looking to see how this pivotal range breaks this week, right between here. Questions on dollar yen. Japanese inflation comes out again on Thursday. Keep an eye on that one, but the top side certainly looks a little exhausted here. So no imminent move, but certainly something we'll be tracking, a break of this objective weekly opening range over the next 24 hours here. So that's number 2. Number 3, let's jump into the SPX. It's been quite exciting. So the breakout, essentially, here's what the SPX looked like into the start of the week. Major resistance, okay, 44.91, 44.86 is 786 retracement from the highs, 100% extension off the lows, uptrend resistance. If that breaches, likely to see a runner. Here it is. So we got the breach. Next upside levels are very objective and non-disputable. Okay, the objective high day close, 45.35. Not Mike Boutros' opinion, not Jamie's opinion, fact, right? The record high, 45.51. So you've made the breakout, you've cleared most of the major Fibonacci levels, you've pivoted back above this key range at 44.86. Look for support there on pullbacks. Next upside target's the high day close at 45.35. Now, if you're not already long, you know, it's not the time to jump in for the SPX level specifically. Yeah, it's you've already broken out. I mean, what's your respectable stop here, right? You could try to put a stop against 44.86, but you're already, it's a mature trend, right? So I wouldn't, not my cup of tea. I wouldn't necessarily advocate the short here, but you know, we're looking for signs of that topside exhaustion. It's been a pretty nice rally. Here's what it looks like on the daily chart. So even the daily chart, remember, we broke the first signal of uptrend resistance, uptrend support rather, this year. We broke to the downside last month, tested it as resistance, just missed the 100% extension. The 100% came in just lower. We never actually made it before breaking out. So if this is a bull flag formation, here's the clear breakout. Again, high day close, 45.35. The record high, just a bit higher, right into that slope. Like here, let me take one of these circles here. It's your next major resistance zone. Beyond that, you're looking for 46 and above. But keep an eye on this today. Keep an eye on this today. Be looking for a topside exhaustion over the next 2 days. Whether it reaches the high day close or not, that's the region you're looking for. And here's the risk to the immediate rally. Questions? All right, we'll see how this one acts as we open up the US trade session here in just under an hour. That is number 3. Number 4, here's where we get really interesting. The sterling breakout now testing near-term resistance. So the sterling levels, we highlighted that the previous update as we were opening up the week, and the sterling breakout seemed clear. right? Here's the daily chart look like. We pivoted back above the yearly open. We pivoted back above the median line we've been following, and it puts the focus right here on the 786 retracement into the 100% extension. That gives you 38.32. Here we are now. Here's what this scalp looked like yesterday or on the Sunday open. Pull back right into former slope resistance, that blue line, support, and then rip. First target, second target. I have sterling at near-term resistance here. Here's the daily chart. Okay, and again, here's what the daily chart looked like yesterday. Too clean. We're right there. If you're holding sterling longs, a good position to either reduce or close. Okay, I'd leave a little bit on just in case you get the extension to September high day close. That's 138.65. But you know, for all intents and purposes, we're at resistance. This is the 100-day moving average. The 100% extension, so 2 equal legs off the low, 1, 2, 3. And again, that's 786 retracement. So I'm looking for inflection here today, okay? If we pop through, 38.65 could be an exhaustion point still, but the point being, we are now approaching multi-month downtrend resistance, just a bit higher. I'd be looking for exhaustion. Here's the intraday chart. UK core inflation and data comes out tomorrow morning. Could be a player here. But as we open up the US trade session, again, we are at uptrend resistance. We are at a measured move off the low. Questions on sterling? So Aussie is almost in the same shoe, right? Aussie is in the same positioning. We're essentially stretching higher. Here's what the Aussie trend looked like as we opened up the week. You know, this one had a little bit more of a conviction hold near that 38.2 retracement, but it did break through. And the rally, once it you know, panned out, now testing major resistance into the June lows. Again, here's what the scalp looked like last night. Here's what it looks like now. All right, so the pullback, super clean. The pullback went right into slope support. That held. Break through the weekly open, takes you into key resistance right now, right here at the June low / 38.2 retracement at 74.50, 74.76. We're at the upper bounds of it right now. So again, if you're holding Aussie longs, an area to wrap it up a little bit, take a little off the table, go break even on your stop. If you're looking for new positioning, we're watching near-term price action critically here. Okay, critically. I'm gonna need a break below 74.12, 74.13. Not only is this the 786 retracement and the September 19 high, it's also the objective weekly open here, just a pip off. So if we break below that, that's what would shift the focus lower for me, at least suggest that we have a near-term reversal at hand. All things held constant, it's bullish above 74.12. Okay, so one of those trades where it's the same as sterling, where the broader trade is the medium term is higher, but that's now at resistance. Does the broader longer term downtrend start to come into play? We'll have to watch. But at the end of the day, Aussie's at resistance here to open up the trade session. A breach from here, you're looking for 75.56. It's the 50 from the drop. But certainly at this point, looking to see if we get some resistance here today. Aussie is clear of data pretty much until next week. You have inflation data from Australia on the 26th. So for this week, Aussie docket is clear. Any questions on Australia before we move on? Okay, also on that update, we went over the gold levels. And here's what gold looks like. I don't know what I want to say about this. So the whole premise of what I explained to you here is that we're basically looking for a low. Okay, we're basically looking for the drop. It's either the 50 or the 618 to register a significant low within the uptrend and look for the resumptive move. Now the 50% held, but the resumptive move doesn't look like it's got much behind it yet. Here's what it looks like. did rally, went to 70.80. I don't like how we're kind of chopping around there right now. This is still key resistance. Let me take a step back. Here's what gold looks like on the weekly charts. Okay, so remember, we've been in this range, 1738, 1791, for 6 weeks now. So excuse me if I don't get necessarily excited until we clear 1791, which is the 618 of the drop. We haven't gotten a weekly close above that trend line resistance yet. And it's flirting with a breakout. At the same time, if it breaks 1738 on a closed basis, we're heading right back to the yearly low. So is this going to be another situation where you get a long wick through that and back again? I don't know. I want to see a catalyst, okay, kind of charge the break. Here's what it looks like on the daily chart, 1791, 1796. You got a lot there. You got the 618 retracement of the decline from last month's high. You got this month's high day close. You got the 100-day moving average and a 3-point slope resistance. 1, 2, 3. It's all right here. So that's all to say we need a weekly close above this region to validate the resumptive move. Upside targets would be 1890. I'm sorry, 1809 and 1825. Critical resistance at 1825. But right now, the whole focus is on what happens right here. Again, here's the scalp. Here's the update from Sunday. No change on those levels. In weekly, only the closed basis, but I think it tested the basic trend line from 2019 low and 2020 low last week. Jay, you're talking about gold? Okay, let me take this to the weekly. Let me see what you're talking about. 2019 lows. I see what you're talking about. So you're not actually taking the 2019 low, but you're looking at something like this. $2020 lows. Okay, so you're talking this. So I actually do like this. And Jay, if you scroll back to a couple of months ago, I think we were looking at this before this and then the inevitable break. I do like how that slope is a very nice inflection, right? 1 touch, 2 touch, 3 touch confirms, 4 couldn't close below. Here's the break. That's near-term resistance. What's interesting is that that line you just pointed out, Jay, actually almost converges dead on with the 100-day moving average, like right here. What's that? 1809. Sure. If pasted on the 2-hour chart, it looks like a clean pivot from September. Oh, you're getting me excited here. Yeah, you can see pretty clear pivot inflection here. Sure, sure. The only thing I would tell you is that I do think that the 1795, 1791 level is a much more critical level despite that slope. And that's all based on previous price action. Look at this simple cursor going all the way back to 2017, 2016. Pivot, break, acceleration lower, resistance, 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 pivot, break, acceleration higher, support, 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 pivot, break, acceleration lower, and so on and so forth, has me still looking at this as being the key region of resistance. I do like that slope though, Jay, not bad. Not bad. We'll give you a tell on the breakout where this could peter out, but that's still the big Bahama Mama for me. I still need to get through that 1791 level. That's still big resistance. Good eye, Jay. Continuing to impress, brother. Good stuff. All right, so that's gold. Looking higher, but we need to see some sort of inflection, some sort of acceleration through the 1790 level to give this thing any conviction for the continuation higher. Moving from gold, number 6, here is euro. Number 7, going a little bit out of order this week, or today rather, but here's what euro looks like now and what it looked like back on our last update. Here's on the 14th. We were talking about this bottoming process. So remember the weekly chart, right? This was, for me, not so impressive. I didn't know what to do with it. Here's the 2019 high. Here's the 100% extension and the 2016 highs. Major pivot. Look what price did. Last 2 weeks saw intra-week lows below that region, but did we close? No. So sure, near-term rebound off support, I'm down, that's cool. Weekly chart's pretty clean on that. Here's the daily. Coming off of downtrend resistance, or excuse me, support right here. All right, cool, you got some divergence. Here's the median line break, and here's the pivot back above that 116, 116.20 level. Checking resistance now at the former lows from August. Major resistance at 1704 into 1695 right here. 38.2 off the ascent, 2020 low. Former swing lows from back here in March and April of this year. Downtrend resistance. It's all right here. So 2 levels of resistance on the euro rally where we're looking for possible inflection on the trade. Here's what it looks like on the intraday. So that slope that we were following from last week, still holding, okay? We pivoted back above this, we're here now, essentially. Testing 1663 as resistance. So where do we go from here? Well, if this is still gonna make a test of that key region to the 17 handle, any pullbacks, any losses should be capped by this region here at 116.21. And again, I'd be looking for a major inflection up here if we get it. On this breakout, one other prudent move is just to take a measured move to see even if we're going to make just 2 equal legs off the high, and this is where the problem starts. This gives you 1670 rather, 1671, which means we may have completed it. So for me on the euro, all I'm looking for today is the pullback from this level. If it fails right here, literally guys, and just continues higher, there's no trade. It's going to be into 117, you look for a reaction there. If we get a larger dribble, okay, you're going to look for a low off that plane, a low off this level to fade for that extension back towards 17. But it's a slow sort of near-term bottoming process by my part. Any questions on euro? At 38.2 from the September high. So I was going to add that. I haven't added that yet because it's going to get kind of cluttery, but I did look at that. This is what you're talking about. And where that 38.2 comes in is basically where we are right now. Okay, 16 like 71. No. Yeah, 1671. It's literally almost the same level. So keep an eye on, you know, the 100%, the 618, whatever you want to call it, the lows from August. It's all right here. So yeah, I'd be looking for, you know, that pullback today off this level. If it's heading higher, losses should be governed by 1620, major resistance into 117. Questions? Eurozone core inflation rate on tap tomorrow, expected to uptick. Okay, the headline read for core inflation year-on-year final is supposed to come in at 1.9 versus the 1.6 previous read. For Canada, core inflation is due tomorrow. We'll look at dollar CAD in a moment. That one's supposed to come at 4.3%. So again, the inflationary tailwind is, you know, manifesting essentially across the globe. It's not just a US thing. But I digress. That is euro dollar. Dollar CAD, let's hit that now. So here's Loonie. The decline has been pretty paramount. I am looking to fade this, just as a disclaimer. I love with the level that we're coming into now. Let me show you this first on the weekly chart. So here's dollar CAD on the weekly, okay? Levels of which we've been following well before even the breakout is the 2018 low close, decent pivot in price. That's basically 2314. The 618 off this year's low right here gives you 2366. So this is a major support zone on the dollar CAD pullback. Not only that, and I showed this to you yesterday, the slope in red here, This is a simple parallel of the dominant pitchfork we've been following for the last couple of years, extended off the low that we made back in January of 2019, support, break, resistance, break, support. So we're in a big zone today for Aussie dollar. What does it look like on the daily chart? Here's what the daily looks like. Pretty precipitous decline. Whether you're looking at the consolidation formation that broke, or whether you're looking at the head and shoulders, a lot of people left shoulder head, right shoulder, look neckline break. Either way, that decline is starting to get a little tired as you straddle the 618 retracement of the advance off the yearly low and those objective swing lows from March. So you can see it's literally straddling it. We closed below, we closed above, we're below there again, but at the end of the day, parallels off the high suggest, man, you're at downtrend support. You're gonna sell into downtrend support after, geez, a decline of what? Decline more than 4%? No, I'm not interested in that. So for short, good area, take some off the table, lighten the load, bring your stops down to break even or better. 24.40 is where I'd have it. Here's what it looks like on the intraday chart. Okay, so decent moves here on divergence with the price action making a lower low, the oscillator not making a lower low. We're still in this embedded. So what I showed you on the daily chart is this red channel. Within that red channel, there's this blue channel, real tight, real tight. And you have two at support, but you got three resistance support touches already. Divergence into the low. If we break the parallel, one other level is going to be that 24.40 level. That's the pivot that'll give you near-term conviction that a near-term low is in place. You're looking for the September low day close at 25.25. So on the daily chart, I had 24, essentially 25, right? 24.96, those swing lows. Basic premise is if we break out of this, you're looking for an ascent to downtrend resistance still, not a full-on reversal, but even just to downtrend resistance takes you to 25.20. So I'm stalking this one with great interest today. Recognize again that you're getting, CAD inflation data on tap tomorrow. It's expected to be higher, okay? But so is this scenario here in the US. Again, a mature trend, a very mature trend. I do not want to be jumping in, on the short side of this here. If we get a decent recovery, whether it's failure at 24.40 or failure more, I'd like more appropriately at 25.20s. The whole point is if it breaks lower from here, your 22.40 and 21.50 would be the measured move off the high. Decision time for the dollar CAD. Any questions on Loonie? Okay, that is number 8. Number 9 is crude, and everyone's talking about the crude breakout. What's going on here? Again, I have us at resistance. So I'm going to take you back to the monthly charts here, or the weekly charts, because this is pretty huge. So a couple of levels to note. First of all, the 77.37 break, that's where everything sort of basically went AWOL, completely hyperbolic to the upside. We've cleared the 2011, 2012 lows. We're looking right now at the 2011 low week reversal close. It was a major level. We're pressing that now with uptrend resistance just higher. Keep in mind, I looked at this with you guys yesterday, but I think we're at 8 straight weeks up. 9 straight weeks up. Okay, so a mature trend. It's the same exact setup, guys. Not only that, you're marking divergence on all the last 3 highs. So it's a breakout, it's an uptrend, no doubt about it. But again, it's the same situation where you find yourself rallying into uptrend resistance. So if you're going to play the pullback, you're super light, you're half leverage, if not lighter, because it is an uptrend. But at the same point, if you get that pullback, you might get a better opportunity to get back in on the long side. So 82.84 is going to be the 2011 low week close. I think we stick here for a while. Support, bullish invalidation down at 74.90. Top side resistance level from here, you're basically looking at 88 and 90.68, which would be a 618 of the entire drop from the highs in 2008, right? So daily chart, can't get excited. Here's what the intraday chart, oh, that was the weekly chart. Here's what the daily chart looks like, rather. A 1618 extension off the low gave us 81.90. Again, that 2011 low we closed was that, what was it, 82, 84. That range essentially still resistance here. Uptrend resistance just higher. See the intraday wicks basically capping out there. Even if it pulls back, near term 79 support. At the upside, again, 85.61. Here's the scalp. Weekly opening range is taking shape just above that pivot zone. So when we're in a trade like this, the best thing to do is just take a step back, objective as possible. If the weekly opening range breaks lower, we're coming off of uptrend resistance. You look to play the near-term playback. This is just last week's open, but if that materializes, you'll basically tack on a quick retracement of the entire advance. And if we do that, just for argument's sake, a 38.2 comes in right at that pivot at 74.90, which was our bullish invalidation on the weekly chart. Do you remember that? Here's the 236 right there at 78, 78.60, right there at that confluence. So I don't have conviction on using this retracement yet because I don't know that this is a high. If the weekly opening range pivots below 81.90, well, then that's the break of the weekly opening range. Then that pivot becomes something we want to operate off of. Make sense? End of the day, we're basically looking to see if we can get some resistance pullback here on the crude rally. Questions? We're bullish crude, guys. We have been. I've been telling you that for a while. It's a fundamental story. It's a technical story. It's a geopolitical story. But all trends will, again, mature. We'll get kickbacks. We'll hit that uptrend resistance. And I think we're approaching that now. So watch out here on crude. Okay, last but not least on my list is Bitcoin. Just to take a look at what this thing is doing. It's getting all the attention, but at the end of the day, guys, the last 5 days have essentially been a wash. It's interesting. Every day you come in, you know, whether it's CNBC, Bloomberg, Reuters, oh, yo, Bitcoin, and they're talking about it for the last 4 days. We haven't done jack. We're still holding major resistance. And this is the same chart, guys, I've been showing you literally for months. The level at hand is 63,086 into 62,986, this region right here. It's the objective high day close. It's a 1618 extension from the ascent off the lows in July. 1, 2, 3. And you see the last couple of, that's exactly where we've been petering out. The record high is just higher. This is still a deadly zone. This is still a deadly zone. Now, we do have a measured move on the breakout into 77,000 and change, and I do think you see that. But right here, right now, respect this pivot. If you get a pullback, that's support. That's bullish inval. I don't think you get that low. But that's support, and the breach above 64.89 is necessary to mark sort of the resumptive move for the uptrade targeting 77 and change. But this is big. This is big. Any questions on Bitcoin? Or any of the other altcoins? Here's Ethereum, right? Basic trendline resistance, highs from September, dragging into it. This is the high day close, 38.58. We're already checking it here. Again, the record high for Ethereum. Whoops, coming in just a bit higher. 43.80. But you get the picture. Okay, you're likely going to see something happen in the crypto block over the next 2 days. It's either going to be the breakout. If the dollar losses start to pick up pace or start to surmount a little bit more speed, likely to see a breakout 43.80 here real quick. Bitcoin on the upside would be right into that high record at 64.89. But both of those levels need to clear on Bitcoin and Ether to get the prominent breakout to fresh highs. So keep an eye on that this week. Any other questions or trade setups, guys, you'd like to look at? It's quiet. If you've been a little frustrated or you got some FOMO, keep it cool. We got some pretty interesting event risk on tap tomorrow with that host of inflation data, 3 major economies with the inflation data coming out tomorrow. On the back of what we saw last week with the US inflation just blowing out, you might get some decent resets on these moves. So I will leave it there. I will see you guys on Thursday on the back of this inflation read tomorrow. And we'll see where things are trading from there. Best of luck trading, guys. I will see you on Thursday. Same to you, Jay, Steve, everyone in the room. Cheers.